Good afternoon. Today is Tuesday, May 23rd, 2006. This is Brian Shannon with Alpha Trends Blogspot. Thanks for joining me here. We're going to take a quick look at how the market finished today. Started out pretty strong with a gap, but we are in a downtrend. So whenever you see a gap in a downtrend, wait for a little while. Make sure that the market does have the ability to follow through. The market's severely oversold. A lot of people have been looking for a bounce in here, myself included. However, that bounce is yet to materialize, and you have to keep in mind that I've been stressing over the last week and a half, 2 weeks, that we have to be very defensive in this market environment. You have to really have the ability to take a look at the market, not get caught up in what you believe is going to happen, but instead take a look at it and set your stops and see what's going to happen from there. So I've been looking at the 39.50 level as a resistance area for the Qs, and we can see that again today the market failed to get above that level. I did take an earlier long position in the Qs, and that was based really off the short-term chart, which I'll put up here in a moment, the 2-minute time frame. I bought on one of these little pullbacks and then set it below this 39.17 level, which fortunately I was stopped out and I didn't experience a much bigger loss. You can see right there that allowed me to save 50-60 cents there by being stopped out where I did on that one. Also notice this orange moving average. This orange moving average is it's a 5-day moving average, and it's been acting as resistance not only for the market, but obviously for a lot of stocks as well, as the market is composed of stocks. A lot of different stocks here. This one, the NASDAQ 100, obviously, 100 stocks. Not to belabor a point here. The point, though, is the market continues its slide. There's a lot of people looking for the market to rally. Those people are getting frustrated, spitting their stocks out at the end of the day here. We can see the heavy volume came into the market. So where does this leave us? It leaves us no different than where we were yesterday and the day before. There's a lot of people looking for a bounce. That bounce is not materializing, and we could be in for further trouble. So continue to be extremely defensive in this market environment. Let's take a look at some of the stocks I've mentioned over the last couple days. I do have my video equipment back up and running, so I will have another stock video this evening where I'll take a look at some stock ideas potentially for tomorrow. Yesterday I had mentioned we still keep an eye on this BIDU. BIDU is getting a little bit more constructive in here, and now I think that we've got pretty much most of these moving averages heading higher. The 5-day moving average is flattened out. I think back above 83 and a quarter or so tomorrow, perhaps we could get some continued upside, and we would want to look at our stop maybe underneath these lows here today, or this afternoon's lows rather, of 81.79. You see the stock held up much better than the rest of the market, particularly late in the day there. So BIDU continues to act good. CTXS was one we've been looking for to get back above that declining 50-day moving average. And look how the 5-day moving average, and look how it's been holding this market, this stock hostage basically. So right now the stock is being held lower against this declining 5-day moving average. Again, all these charts are brought to you by Realtick, www.realtick.com. I think they're one of the better charting platforms and trading platforms out there. You'll see that 50-day moving average on CTXS has been acting as support. The stock still continues to hold above there, so we'll give it the benefit of the doubt, and now perhaps getting above today's high, which was about 39.65, 39.66 or so. Getting above that is where we'll be able to see this market perhaps get moving to the upside. But again, that 5-day moving average has been holding it captive. So let's keep an eye on that stock and see what happens tomorrow. IVAC, wanted to see the stock get above $23 a share. It did get above $23 a share, but as the market started breaking down, a lot of other stocks did. I put a new link on the side today for Brett Steenberger. It's titled Trading Psychology. He had something really smart to say yesterday. He has a lot of smart things to say on his website. Real hard-working guy. He's actually got a couple websites, so make sure you take a look at all of them. But one of them was, one thing that he said yesterday is, few traders he encounters differentiate between the development of a strategy, that is finding a verifiable edge in the markets, and the tactical execution of that strategy, which requires ability to read markets in real time. And that's where a stock like IVAC comes into to mind with his comments, that sure, it was a good setup, but as the market's breaking down, you don't want to give that back. You don't want to continue to hold below your 2210 stop when the market's falling apart. What you have to do is learn to look at the market in real time. He continues to go on and say there are many quant traders who are almost completely tone deaf in reading markets, and there's many discretionary traders who have a feel for the real-time order flow but have almost no analytical skill. It's a trick, it's a challenge rather, to combine your analytical skills with the ability to read in real time and stay on your toes and listen to the continually changing message of the market, especially when we have a high risk environment like this where things continue to move very quickly. We're getting the true definition of volatility in here. MDTL stock continues to be, this 5-day moving average is declining. Nice to see that green, the 100-period moving average flattening out, but we want to see maybe back above this 26 level. MDTL's had a heck of a sell-off here, but that doesn't mean it can't keep going lower. Look at ERS, for instance. This stock last week hit a high of 64, and it's now 20. You might have bought it at 35 because you thought it was down too much. Down at 28, 25, 24 because it's down too much. There's no such thing as down too much when people are selling. Stocks trade for what they're worth at the moment. This stock isn't worth 25 or something based on a PE. There's a problem with this stock, and until it starts to flatten out and head higher, you've got no business buying a stock like this. That's just the bottom line on the way these stocks move. PEIX turned around rapidly here today. The stock was one of the few stocks that gapped higher and continued to hold most of those gains throughout the day. It's a very volatile stock. I'd expect a little bit more pullback in here, see that 5-day moving average flatten out, and maybe continue up towards 35. I wouldn't give any specific recommendation on this one because it is very volatile and can be difficult to trade. This morning I'd put a couple stock charts up. EMIS, this is in a nice uptrend. Looked like it was holding support at the 20-day moving average. I thought the buyers would take back control above 750. The stock ran up above that level. I'm sorry, not on, rather 9. Looks like I wrote down my numbers wrong. But anyways, I would have to say probably above 915 is where I meant. The stock got above there, was also unable to hold its gains. You got to be able to read this stuff in real time and make sure you're not stuck holding the bag at the end of the day. LTXX, this is the one I was looking for a move above 17. And another stock that broke down towards the end of the day. Still a great looking daily chart and also weekly chart. So this is one to keep on the radar. When I put these ideas on here, I'm not looking to give advice so much as to show you ways to look at the way to look at the market. And that's what I hope you're getting out of this. I don't want you to specifically say, well, he said buy it above this level or that level, because that may be my preference, but that strategy may not work for your own the way you look at the market, the amount of risk you're willing to tolerate, maybe your time frames and the amount of time that you have actually to commit to the market. Vista Gold is a stock that came down to its 50-day moving average. I did trade this stock and got out as it got up towards that daily R2, which, let me see if I have a chart with R2 on it. I guess I don't, but it was at about 790 or so. Anyways, the stock broke above that level of resistance and the 5-day moving average at about 750, ran up. And again, you got to be quick. You got to take your profits in this market when they're there, because there's very little follow through, and I think we could have further trouble ahead based on the way the market is trading. So, continued defensive stance. My name is Brian Shannon. This is Alpha Trends Blogspot. Thanks for visiting. I will be back this evening with another video with some ideas and further thoughts once I've collected them, probably around 10 p.m. Eastern, so you don't have to keep checking back. Thanks for your time and have a great evening.